10x token. Just a little heads up, this section is all about crypto. It goes quite deep into the details. Hopefully I've provided enough information for it to all make sense, but if not, please just pause the video, go Google for some answers, and then come on back. All right, 10x token. Crypto for entrepreneurs. Rich people acquire assets. Cryptocurrency is a digital asset. An asset is something of value. Market value is based on supply and demand. If demand increases and supply decreases, then the price goes up. In crypto, it's still new. Imagine if you had invested in Apple, Google, Facebook, Tesla when they were new. Being early is everything. But being early means it's high risk, high reward. The stock market's S&P 500 has a long-term annual average return of around 10% per year. Compared to Bitcoin, Bitcoin has 10x'd every 2 years. Averaging out the price per BTC, in 2010 was worth 10 cents, in 2012 $1, in 2014 $10, 2016 $100, in 2018 $1,000, and in 2020 $10,000 per BTC. And in the current bull run, Bitcoin's all-time high was over $64,000. Bitcoin's market cap has exceeded 1.1 trillion, and crypto's market cap has exceeded 2.5 trillion. So what about 10x token? The crypto for entrepreneurs. 10x will be forked from SafeMoon, the world's fastest growing cryptocurrency. In less than 3 weeks, SafeMoon gained over 3,000% in value, hitting a new all-time high. But since then, SafeMoon has lost more than half its value. And such is crypto. However, SafeMoon's explosive growth popularized some new tokenomics. A 10% tax on every transaction. So what's the benefits? Hold your tokens and you automatically gain more tokens over time. As tokens are burnt, the circulating supply decreases, which increases your token's rarity and value. And the automatic liquidity pool continually increases the price floor. The tax makes the coin less appealing to whale manipulation and arbitrage. With a 2 billion plus market cap and over 2 million holders, SafeMoon has proven what is possible. But SafeMoon has its fair share of criticism, security concerns, and a lack of utility beyond its tokenomics. So how will 10x token be different? Well, first, we'll address the CertiK and HashX security audit concerns for SafeMoon. Also, the 10x token will have massive utility when paired with the 10x app. Like SafeMoon, we will have a 10% tax, but with a twist. 10x token will solve the problem of early adopters having a disproportionate advantage over late adopters. We will achieve this by building a flywheel into our tokenomics for continual momentum and growth, regardless of market conditions. So how? Well, the 10% tax is split, 50% instant and 50% compounding. Instant tokenomics are awarded every week. This provides instant gratification, it encourages early adopters, and it moves with the market's volatility, so it's excellent in a bull run. And compounding tokenomics are tokens locked away every week and released over a 10-year period. This provides compounding growth. It benefits late adopters, and it is immune to market volatility, so it's excellent in a bear market. The compounding releases unlock taxed tokens at regular intervals throughout the 10 years. So if you put away this week a whole bunch of tokens, 20% of those tokens go into a weekly wallet, and they'll have 520 unlocks over the 10-year period. Another 20% will go into a monthly wallet with 120 unlocks over a 10-year period. Another 20% goes into quarterly with 40 unlocks, another 20% into yearly with 10 unlocks over the 10 years, and finally 20% goes into a 10-yearly wallet with just a single unlock at the end of the 10-year period. Instant and compounding both split the token benefits between reflection, reward, liquidity, burn, and growth. So here we have the full 10% tax, 1% going to instant reflection, 1% to instant reward, and then we have instant liquidity, instant burn, instant growth, followed by compounding reflection, compounding reward, compounding liquidity, compounding burn, and compounding growth, each getting 1% of the 10% tax. So taking an example where weekly trading volume was 100 billion tokens, 10% of that for the 10% tax would be 10 billion tokens. Splitting those 10 billion tokens 10 ways, you have reflection receiving 1 billion this week, reward, liquidity, burn, and growth each getting 1 billion this week for instant rewards. At the same time this week, you also get 1 billion going to compounding tokenomics. So 1 billion for reflection, reward, liquidity, burn, and growth each again, but this compounding and released over a 10-year period. And for each one of those compounding, let's take reflection for example, that billion gets split out into 520 releases for weekly, which is roughly 1.9 million tokens being released per week, 120 monthly releases, which is roughly 8.3 million tokens per monthly release, 40 quarterly releases, which is 25 million per quarter being released, 10 yearly with 100 million tokens being released every year over a 10-year period, and one big bang 10 yearly release of 1 billion tokens. So if this volume continued of 100 billion tokens trading volume for the week, and that continued for just 1 year, then compounding, the weekly compounding release would grow to 100 million tokens being released every week as they continue to stack up, with more and more being locked away every week. All right, so reflection. Reflection is passive income. Automatic reflection of free tokens to holders. The burn wallet is excluded, so 100% of the reflection goes to holders, and the compounding wallets are included in these reflections. Reward, and this is active income. This is a massive airdrop to 10% of holders who have both, 1, a high 10x action score in the 10x app, and 2, they're holding $1,000 or more worth of 10x tokens. Liquidity. This increases the price floor. So 50% of the 10x tokens are sold to buy the paired token, for example, ETH for Ethereum. 50% 10x tokens plus the 50% paired tokens are added to liquidity pools, and the liquidity pool LP tokens are locked for 10 years. Now the LP token 10-year lock itself has a linear weekly unlock over 520 weeks. With every weekly unlock, the liquidity can optionally be removed. Now any unlocked liquidity can only be used for the following. Either A, a 50% relock for another 10 years, and this can be used to move liquidity to expand into more exchanges, or B, 50% being moved to a strategic fund for buyback and burn. And this can be used to strategically cause big green candles in the market to attract more people to the token. Burn. This is used to reduce supply. So automatic burns reduce market supply with every transaction. And the compounding monthly, quarterly, and yearly burns will create predictable hype. And the massive 10 yearly burn will be a huge event. Growth. Now this is a community treasury. So money used to minimize bear markets and maximize bull markets. The spending is governed by the community through proposals and voting. And examples of this could be for marketing, advertising, influencer campaigns, rewards, airdrops, bounties, exclusive events and experiences, virtual conferences, NFTs, staking, giveaways, product development, hackathons, exchange listings, whatever it is that the community wants to back and get behind and vote for spending this growth budget. Okay, so 10x tokenomics. The token will have a max supply of 2 trillion. That's 100% of the supply. Now this is 500 times less than SafeMoon's 1 quadrillion, making us more rare. The 10x token is deflationary with no token minting and a fixed supply. We'll have a 10-week launch burn with 1 trillion tokens or 50% of the supply. So every week for 10 weeks after public launch, 5% of supply is taxed burnt, which means 900 billion tokens go to the burn wallet, and 100 billion is spread across instant reflection, reward, liquidity, burn, and growth, plus compounding reflection, reward, liquidity, burn, and growth. So only roughly 50% of total supply remains after 10 weeks of taxed burning. and the reflection and rewards during this time are massive for our early adopters, and this is going to be our launch rocket fuel. Our public fair launch pre-sale initial liquidity offering will be 500 billion tokens, which is 25% of supply. We will launch on Unicrypt with a $1 million market cap valuation pre-burn. There'll be a max spend of $1,000 for 2 billion tokens. The pre-sale soft cap will be $200,000 for 400 billion tokens, and the pre-sale hard cap will be $250,000 for 500 billion tokens. The pre-sale price is 0.0000005, and the listing price is 0.00000055, or a 10% increase on the pre-sale price. 60% will be liquidity locked for 10 years with a linear unlock, which is 120K to 150K locked away. 40% will go to the growth wallet and be used to cover launch fees, which is between 80K to 100K. Any unsold tokens from the presale, up to 160 billion tokens, or 8% of total supply, will be burnt untaxed. And any sold tokens will be transferred to purchaser wallets untaxed, which will be a 10% saving. The pre-sale liquidity locked will be 300 billion tokens, or 15% of supply. So assuming we reach the pre-sale hard cap of $250,000 for 500 billion tokens with a 60% liquidity lock for 10 years on a linear unlock, this would mean 300 billion tokens are liquidity locked at launch. If, however, we only reach the pre-sale soft cap of 200K for 400 billion tokens, then with 60% allocated to liquidity, 240 billion tokens are liquidity locked, with the remaining 160 billion tokens being burnt untaxed. The team, 100 billion tokens, 5% of overall supply. These tokens are fully locked for 10 years, and then a linear release each week over an additional 10 years. The team wallet transfers out to individual wallets are untaxed, just like the pre-sale. Growth, 100 billion tokens, 5% of total supply. These tokens have a linear unlock over 10 years, starting from the very first day over a 10-year period. Governance proposals and votes from the community will direct the spending, and the growth wallet transfers are taxed. We'll have a wallet max holding limit of 10 billion tokens, or 0.5% of supply. Now, limiting wallet max holding, this helps to avoid whales hoarding tokens. And if your wallet balance exceeds the limit, your transfer will be reverted. And this excludes exchange wallets and project wallets. The swap and transfer limits of 2 billion tokens, or 0.1% of supply. So limiting the transfer amount helps to discourage whales from dumping tokens. No sale amounts higher than 0.1% of the max supply are possible at once. And if you try to exceed the limit, your transfer will be reverted. And this excludes exchange wallets and project wallets. Anti-manipulation. The crypto markets are heavily manipulated by institutions and whales, from pump and dumps to Wyckoff accumulation and distribution. Our 10% tax protects us from these bad actors in the market. Anti-arbitrage. So normally market price differences between exchanges are monopolized by institutions and whales, skimming arbitrage profits all over crypto. 10x token is anti-arbitrage, which means the average buyer like you and me will be able to shop around for the best price between exchanges. 10x wallet. A crypto wallet will be integrated into the 10x app and 10x extension, with untaxed transfers between 10x wallet and centralized exchanges. 10-year hodl. Massive rewards start after tokens finish their 10-year lock cycle. The reflection, rewards, and price impact from that 10-year period will be well worth the wait. Also, another unique difference. We are omnipresent. We are everywhere. So we will launch 10x token on 10 blockchains over 10 years. Binance 10x token, Ethereum 10x token, Bitcoin 10x token, Cardano 10x token, Polkadot 10x token, plus 5 more to be chosen by the 10x community. So why? Why would we do this? Well, it's because many people in crypto are die-hard BTC or ETH or BNB or ADA, and being on a single blockchain would limit our audience reach, and impact. We will have a native token on 10 of the top blockchains to capture the entire crypto market. It will also give 10x the unique ability to gain attention across all crypto social circles. Plus, the free organic SEO just by simply naming our token Ethereum 10x token with the short name ETH 10x. The 10x token will show up in search everywhere. And we will do everything in our power to accelerate hypergrowth by seeking to partner with King Kong, Australia's leading ROI-driven digital agency. A digital agency that guarantees results or they don't get paid. To quote King Kong's website, "We can beat any agency, marketer, or traffic expert on planet Earth, or you won't pay us a single cent." King Kong's unique selling system has been used in over 416 different industries and niches to generate 1.33 billion in sales. Our plans for paid traffic are insane, and 10x token will be truly remarkable. And beyond its tokenomics, it only gets better when paired with the 10x app.